This year marks the 50th anniversary of financial futures and the birth of the modern exchange-traded derivatives markets. On May 16, 1972, the CME launched the International Monetary Market, a newly created exchange for foreign currencies spawned from the creative mind of then CME Chairman Leo Melamed. When President Nixon took the U.S. off the gold standard, Leo, with the intellectual backing of Nobel economist Milton Friedman, realized that futures could play a pivotal role beyond agriculture in managing financial volatility.
I had to encourage the members on the floor of the exchange to go into the pits and to trade these markets. Yeah, you use the futures market to manage a risk in finance rather than just simply in pork bellies.
On the day the IMM opened for business, one New York bank's foreign exchange dealer was quoted on the Wall Street Journal as saying, and I quote, "I am amazed that a bunch of crapshooters in pork bellies have the temerity to think that they can beat some of the world's most sophisticated traders at their own game." The bunch of crapshooters went from one success to another, first trading in currencies, then introducing contracts in interest rates.
In 1973, the Chicago Board of Trade, led by the innovative force of Richard "Doc" Sandor, developed the first interest rate futures contract with the launch of Ginnie Mae futures.
I went around and tried to push it. I got thrown out of most banks in New York and said, go back to Berkeley or back to Chicago. Interest rates don't fluctuate. There's no need to hedge.
That was until Paul Volcker, chairman of the Federal Reserve, made the decision to float interest rates in 1979. That moment changed everything.
On Monday, the banking system, Columbus Day, was closed, and the Chicago Board of Trade was open, and it was the first and only place where you could express an opinion on where interest rates were going. And that made the bond contract and essentially made the whole field grow from there on after.
These light bulb moments unleashed a series of innovative ideas and competition that changed the trajectory of our industry for decades to come. In 1981, the CME launched its short-term interest rate futures contract, the Eurodollar, with an important innovation. It would be cash settled without delivery.
That was very difficult to get the CFTC to approve cash settlement in lieu of delivery, of an actual physical delivery. But getting that done meant that you could launch products like Eurodollars in interest rates, or like stock indexes without delivery, but settlement in cash.
This pivotal development opened up another wave of innovative products, including the launch of stock index futures contracts like the Kansas City Board of Trade Value Line Index, the CME's S&P 500, the New York Futures Exchange Knife Index, and the Chicago Board of Trade's Major Market Index. The London trading community took notice of what was going on across the pond and recognized an opportunity to compete and innovate they did. The London Financial Futures Exchange successfully opened at the Royal Exchange to trade global foreign currency products and interest rate contracts.
Intellectually, it's a no-brainer. Why not treat money as a commodity? Practically, of course, quite different, because the banks regarded money as theirs, and the price of money as theirs, and that was a problem. It was exciting because one was being pretty radical in a city that was very conservative but was looking for change and realized it had to change.
1982 also saw the first options on futures contracts approved, as well as the launch of the National Futures Association. That year, former futures market executive Robert Wilmoth launched an independent regulatory body funded by the industry to oversee this vastly expanding marketplace. The global nature of our markets began to take shape in the 1980s as more international exchanges formed and cross-border partnerships developed. The 1990s went off like a bang with the launch of the first fully electronic trading platform, DTB, in January 1990. This enabled startup Swiss-German derivatives exchange Eurex to successfully challenge and overtake floor trading incumbent Life for dominance in the Boone futures contract. Others followed suit, and the launch of Globex and other electronic trading platforms quickly followed. The foundations of our markets were now in place, and more innovations over the next decades followed, producing 53.9 billion financial futures contracts traded in 2022 so far this year.